Okay, so here is our precious metals update, our gold stocks update. We'll also look at silver stocks. We'll look at silver. Generally, silver miners are moving in the same direction as gold stocks, so we'll kind of focus there. We will start with gold. We'll start on the daily chart, and so we now have 3 green days in a row. That's notable, right? So day 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So this would be day 19. We'll just mark that here. It is right now serving as a swing low, and that's because, so this is September 28th. That's your Tuesday. Is that right? No, actually, that's Wednesday. So yesterday, this is a bullish outside daily candle. That is important. That is that's a preliminarily good sign for gold and gold stocks in general, right? We've also crossed above the 10-period moving average, the 10-day moving average in this case. So it depends on how, like, you could say this is actually a daily cycle low at day 49 and now we're starting up again. The point is we potentially have a new daily cycle, or I should say we potentially have a new swing low here. And so whether it's starting a new daily cycle or not, we would expect at least a little short-term rally, and it's really a question of how much momentum we see off of that. We are still thinking about that 8-year cycle low, though. That's the driving force for gold stocks and silver for that matter. But so far, this is essentially a bull flag, right? Like, we made this bullish outside daily candle, and now we've essentially consolidated up here for 2 days. Well, this candle just opened. So, and it's September 29th, almost 10 p.m. So we've been trading for like 3 or 4 hours now at this point. This is what will become the Friday candle. It's green so far. So that's positive. Let's look at the weekly chart now. So on the weekly, I've been mentioning this across other videos. You can, and definitely take a look at the broader market update. I'll pop that up there on the upper right hand corner of this screen. You can click on that. But this is definitely shaping up to be some kind of potential bullish false breakdown if we get follow through. Now, remember, we are in the 8-year cycle low decline for gold, and so that would be a really powerful sign that maybe there's something brewing here. This yellow line here is your 200-week moving average. We closed below it, firmly below it last week, and now we're trying to rally back. What happens when we get around that level? Do we cross above it and maybe even back test it from above? You'll also notice this blue line is your 10-week moving average. So the 10-week moving average is about to converge with the 200-week moving average, what you call a bearish cross, a death cross. That's how it works. When a shorter term moving average crosses below a longer term moving average, it makes sense logically, right? If the shorter term moving average is now below the longer term moving average, it means we're starting to move, like we're moving in the wrong direction, right? Recent prices are lower than prices from a much longer ago. That's a really bad sign. And again, as I remind, you do not need moving averages to tell you that. If something is in a downtrend, that's your bearish signal. The moving averages are just additional. They're just additive. I mean, again, not to belabor the point, but that's your low, that's your lower high. That's your low, that's your lower high. I hope you're seeing this very clearly. This is a big part of how you get that edge, being able to precisely identify a trend. And now we've come all the way down here. And so we could rally all the way up here and still have it be bearish. That would get us back to almost 1800. And we could still kind of turn down lower, right? Doesn't mean, I'm not saying that that's definitely what's going to happen. I'd say it's likely, given how we are having a bit of a liquidity crunch across the entire market, and it's not entirely clear that we've already had our 8-year cycle low, or I should say that this is our 8-year cycle low, because that's what this would mean at this point, right? Like, if we're getting the bottom, it would be our 8-year cycle low. This is week 10 of a weekly cycle. Now, you could say, well, no, this is actually a new NICL on week 41. Maybe, or maybe this is a really short weekly cycle that is left translated. So we only rallied for 3 weeks and then we collapsed for 10. So let's see, what is the percentage difference? That could be useful. So we rallied up 7% and then we rallied, and then, or excuse me, and then we declined 10%. So not that, I mean, structurally, again, it certainly is a lower low, no doubt about that. No, there's no escaping that. But a move above 1688.05 would give us that bullish outside weekly candle. And because we only have one trading day left in the week, it's very unlikely that we'll get there, right? But at the same time, that's actually, I mean, dollar-wise, that's actually not even that much. 1688. I mean, we're talking about like another $25. Now, the other thing, let's just see, what does the 2-week pattern look like? Right. So we have a whole other week to complete a 2-week pattern, which would be a move above 1738. That's really important to understand that. You can change the time frames to give yourself a little bit of an advantage to understand if a pattern is starting to play out on one time frame, you might be able to adjust the time frame slightly to give yourself another kind of view. There's nothing magical about these. This is just identifying higher highs or higher lows or lower lows and lower highs. That's the game. That's how you identify uptrends and downtrends. So that's the weekly. And if we look at the monthly, so again, this weekly is looking quite bullish, nice green hammer. The monthly is starting to build a lower wick. We're coming off of that 50-period moving average, the 50-month moving average that we had been sitting on. But again, this could be setting us up for a lower high that then moves us again, maybe down into this 1450 area. We won't know that until we have more evidence. It's just too early to tell. And if we look at silver, silver is showing a similar situation here on the daily chart. So silver had been bull flagging. Right, so it's not similar in the sense that silver had been bull flagging as opposed to making new lows like gold. And let's see, so this is so it topped out on day 7, and then this was day 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So this is day 19, and you'll hear people talk about half cycle lows. I don't necessarily track that kind of thing. What I do know is that this is a bullish outside candle, just like the gold one is. But notice, the gold candle had made a new low. This is a higher low. That's important. That's more bullish. That's telling you that silver is holding up a little bit better. The last couple days, gold has done better than silver for sure. But like generally speaking, we just held a higher low. That's really important. And we're now essentially bull flagging these last 2 days. So day 20 and 21, presumably. So we could be rolling over into another low. If we look at the weekly chart, let's see if that gives us more of a clue. So the same way we made that higher low on the daily, that's created this higher low on the weekly, which means there's a scenario where this was our ICL on week 31, This was a back test of that ICL, and now we are moving higher, right? So it's almost like gold is printing some kind of new lower low that it's now rallying off of, and silver was strong enough that it avoided that lower low and it made a higher low. It didn't make a lower low, it made a higher low. That's incredibly important to understand that distinction. And so we could be in a situation where this is week 4, but instead of week 2 being the top, we're actually going to see a move above that. And we're still kind of far from that at $20, still more than $1 away, but that's a good way to start to think about it. So I kind of draw that out for you. Like imagine if what's happening here is something like this. Right? That's a possibility. I mean, again, that's what people that are bullish want to happen. Like when on this channel, we don't talk about what we want to happen. We talk about probabilities. That seems like right now it's still a relatively low probability event. Again, we'd need to cross above 20 to kind of get, interested, let's say. And that's another more than 5% from here. But if we do get that move, we could see something like this. I think it's probably more likely that we see, it's actually something like, we could see something like that, right? And then we just kind of meander lower, right? We kind of get a fake out We'll have to see how it plays out. These are scenarios, and as we observe the price action, we'll have a better sense of which scenario is more likely to play out. And on that monthly chart, remember this month was a green candle at one point that was looking like it was going to be a bullish outside month, and then it looked like it was a green candle that was going to turn red. I was saying that. Now we have just one trading day left in the month, and what do we have? A green candle that is now more, it's very, I'm not going to say it's very unlikely. It's become more unlikely that it is going to go red, right? So another way to say that is it's remaining green, which means what we're setting up here is an inside month for October because of this upper wick. But the fact that it's green as opposed to making new lows like gold was is a really helpful sign, definitely, especially relative to gold. But an inside month isn't anything to be super excited about. We're going to have to see how October shapes up. Again, could be setting up for a lower high because, as I keep saying, things don't go down or go up in a straight line. If it's going significantly lower, there needs to be a lower high along the way. That's just the way price action works. And finally, we'll move over to the proverbial gold stocks, right? Your GDX ETF. And that actually looks much stronger even than gold, which is an important hint of all this. So that's interesting. So so this is your daily chart of GDX, your proverbial gold stocks ETF. So we have this day 6 top, and so this is day 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. So this is potentially day 19 of the daily cycle, which is making this a new swing low, but it's lower than this one, right? So what we could be actually looking at is, right, like imagine a world where this whole thing is a daily cycle, like from here to here. So more mirroring gold. We have to be open to these possibilities where this is a day 44 daily cycle low. So let's say that is your like optimistic count, right? And because we don't make any decisions until we see further evidence, that's okay. So then you have 1, 2, 3. This would be day 3 of a new daily cycle, which would be essentially the same for gold. So that's our bullish scenario. If we see more evidence of that, that starts to potentially change how we're thinking about things. So tomorrow would start day 4 or potentially day 20. The real sort of prize here would be breaking above 25.72. The same way we talked about silver and needing to break that existing daily cycle high. And so, we want, like, you could see a world where we see something like this, right? That's what the bulls want to see, right? Stair step our way up. Obviously, I think they want to see something even steeper, but you also want to watch out for some kind of lower high and kind of roll over. And what does the weekly look like? I'll say this is definitely promising. So just like gold, we have the potential for a bullish outside weekly candle. This is looking much stronger than gold, though, even stronger, I should say. And in this case, we would get that level would be 24.29. If we broke above that, that would give us that would make this weekly candle a bullish outside candle. If we look at the 2-week period, again, this is this is an important concept that you can kind of change the time frames to give yourself, just additional perspective. That would be a high. That would be crossing above 25.81. So we've got some pretty clear signals. The other thing to note here is that we are way below the 200-week moving average. I mean, geez, let's just actually quantify that. Yikes. Now that's interesting because once a rally is afoot, that means we could. So we're like 22% below the 200-week moving average. Now that's simultaneously bearish, and once we have a real rally on our hands, it then becomes bullish because it means a lot of people are off sides and need to catch up. I talked about in my previous video, which is, as always, in the description. This is like no man's land, right? Like this area, once we break below that, we pierced slightly below it, and now we've rallied back up. What is that called? It's a false breakdown, which is what is causing this potential bullish outside weekly candle. That is important. That's certainly a sign for people to get a little bit more excited about. Doesn't mean anything is over, because I will point your attention to this candle. Does that look familiar? We had this follow through. We even actually had 3 weeks of higher highs, and then we rolled over. Then we had this lower high, and then we rolled over. So we really want to watch for a lower high. That 2581 area is super important. And the monthly has gone green. It is an ugly doji candle, like just whipsawed people around. But the fact that it's green is the important point. And similar to silver, we're set to open as an inside month in October. That is important to know about. So we'll look at, and so we may have some short-term upside here at the very least. We'll look at Dixie finally. And Dixie is an interesting one where we have our top so far on day 11. And so you could say this is all one daily cycle here. Doesn't really matter. But what we do know is we have a swing high once we crossed below the, or I should actually, sorry, we have a swing high once we cross below this low here. So once we cross below 112 spot 561, right? And we're right now at 112 even basically. So we're quite a distance below it, but at the same time, we're beginning to rally on the daily today. So the Dixie starts trading at 8 p.m. It's around 10 today, or 10 right now. So we've been trading for a couple of hours, so it's still very early. And also notice we closed right on our 10-day moving average, and now we're kind of rallying back. So I've been talking about this. We knew a decline in the Dixie was coming. It's really a question of what kind of decline is this? Is this just a daily cycle low, or is it also a weekly cycle low? If it is a weekly cycle low as well, is it a weekly cycle low that is beginning the 3-year cycle decline? Those are the questions that you want to ask yourself. You don't want to be biased and say, "Oh my God, the first little bearish candle I see on Dixie, that means the major top is in." Calm down, take a deep breath. You want to make sure that you're thinking about the bigger picture. This is your weekly chart, which does look bearish. It is week 17. So it is very possible that the weekly cycle decline is beginning. And we'll get confirmation of that next week when we either get a swing high printed or we don't, right? If we go below the low of this week, next week, that creates a swing high. This is certainly set up for one, but just look at how all the previous swing highs have played out. They've all rallied back. Look at this relentless rally. And if we think about where we are in the 3-year cycle, this is month 20. And notice the month is still green. The month didn't even go red. And we only have one trading day left, so not a lot of time. And obviously you can see the daily candle is starting to rally as we speak. So next month is going to open inside. These are important concepts to understand, right? If something has a lot of wick, that means the next candle is most likely going to open inside. Unless it just somehow gapped up above this wick. It probably isn't going to do that. It's going to open somewhere here. And then we're going to kind of battle to see, okay, which side of the range are we likely to break out on? And we'll understand that by looking at the lower time frames. So complicated action here. Makes sense that we would see gold stocks start to rally as the Dixie begins potentially a daily cycle decline, which is to say, week 17 is probably your ICH. So we'll be watching this one very closely.